while there is considerable data around the lack of financial education among individuals, there's not so much, if any, on the problem that exists within B2B companies. But in my opinion, I don't think it would be unreasonable to assume that a similar picture exists within these companies as well. The issue, however, raises a question in my mind. How can a deep understanding of finance and accounting drive innovation and sustainable growth, especially in B2B tech companies? Now, our guest has had plenty of experience helping businesses, including those in the B2B space, and I'm hoping we'll be able to provide some insights and solutions. But first, hello and welcome to the Predictable B2B Success podcast brought to you by Sproutwith.com. I'm Vinay Koshy and our guest is Jason Kruger. Now, Jason, you are the president and the founder of Signature Analytics, a company which I understand really helps provide financial insights to business owners to help them make smarter business decisions, and very much focused around growth and those in transitional stages, if I'm not mistaken. If I'm also got my facts right, Signature Analytics was recognized as an Inc. 5000 company for 5 years straight for growth, as well as the best place to work. Now, there's a lot that I would like to unpack and uncover, but hopefully we'll get into this. But I'm also curious. You were prior to Signature Analytics, you were at Deloitte's for quite a while. I'm curious, was there a particular incident or event that triggered this journey into creating Signature Analytics to what it is today?
Yeah, thanks so much, Vinay, for having me on. Yeah, as you mentioned, my background started in public accounting. So I was on the financial statement audit side of companies at Deloitte, which is a large, obviously one of the big four public accounting firms. Initially, I wanted to get involved in big Fortune 500 companies. I did that. I actually did that for a couple of years and realized I actually really enjoy the small mid market a lot better because that's where things are moving fast, decisions are being made, decisions have a direct and substantial impact on what's happening with these companies. And I shifted my focus while I was at Deloitte to more of that small mid market. And what I observed was a lot of companies in that space, they really deserve better than what they're getting from their finance and accounting leadership. And what I mean by that is a lot of companies are, unfortunately, they're looking at accounting and finance as a necessary evil, meaning I have to invoice to collect cash, I have to pay my bills, I have to have enough cash for payroll, and I need to make sure that I file my taxes at the end of the year. And what these companies realize as they grow, and we work with companies that are in growth mode, growth mindset, is that as they grow, they start to lose control over those aspects of the business. They don't have the visibility they need to really make the right decisions to achieve the goals they have. To be able to manage cash flow is your basic foundational side of it, and more
Mhm.
importantly, to be able to provide financial information to third parties like banking, like a bank for financing opportunities, or like potential investors. And so they lose that credibility in the marketplace, and it stalls their business. And that, then I know we'll be talking a lot about sales and marketing as well, but has a direct impact on the ability to successfully drive a sales and marketing plan within the business. And so what we brought to the market back in 2008 was the opportunity for these companies to bring that top talent in the marketplace to these companies in the small mid market that they couldn't otherwise afford, but make it
Mm.
very flexible and scalable for these companies. So they have that top talent. They're not committed to one full-time person at 100, 150,000, $200,000 a year. Break up the roles so that you have the right people doing the right thing at the right time, and really provide that confidence and visibility into the financials that will allow them to take their steps to the next level. And so that was the impetus from even at Deloitte, seeing what I saw helped me to really confirm the decision that I was making. Instead of going the partner track at Deloitte, I decided to go the entrepreneurial track. And so I can really relate to a lot of those entrepreneurs out there.
And given your journey to date, what would you say would be your personal area of strength?
Yeah, I'd say it's probably twofold. So one, obviously my background is in finance and accounting. So really digging into the financial side of businesses, understanding, what really drives those businesses and drives the success through the numbers. So having visibility into really understanding the future cash flows of a business, and is what's happening, is that sustainable? And also to help really business owners define and make and confirm the decisions that they're going to make. And when we talk about sales and marketing, what, instead of just hiring somebody in sales or spending on marketing and hoping and crossing your fingers, how does that, what impact will those decisions make on future revenue and future growth, and how do you really break that down? So one is on the financial side, but then on the second area of, I guess, what I would call, you know areas of expertise, is really on just having, growing and running a business. And so starting, as I mentioned, I think before we jumped on, is I started this business with just myself. So one person, we have about 75 to 80 full-time employees now. And so growing from one and scaling, building the infrastructure, the processes to allow us to scale beyond myself has been critical. And so just having that insight and being able to relate to business owners that are in that phase of their career, and being able to point out the areas that, hey, you know what, building or certain aspects of your infrastructure are critical to ensure success as you move forward. And here's the holes, or here's the challenges that you're going to face if you don't get some of these areas or have a better understanding of these areas. So really all aspects of business, what I've learned is critical, is making sure you have the right people in your business with the right level of expertise, and then managing those people, even if you don't have that expertise, being able to manage them effectively to achieve the goals you have.
Certainly, that would certainly speak to being able to create predictable growth for a business. I'm curious, do you find that it's a challenge to find the right people, or the right people with the skills? As in, is it an issue of finding people with the right culture fit, the mindset, etc., or is it more the skills?
For us, it's the former. So it would be the right people and the right culture. Now, I will say there's a lack of overall skill, talent in the marketplace when it comes to finance and accounting. Just looking at the stats from 15 to 20 years ago, the number of individuals that go into college and get an accounting degree has dropped by, I think it's over 20%. The number of individuals that are going out to get their CPAs dropped significantly. And so you have this, the top talent is typically not going to be working with the mid market that are not capitalized, or that don't have backing through private equity or venture capital. So it's very difficult for that top talent in the marketplace. So I'd say from our business, culture and the ability to communicate and how we interact and work with our clients is critical. How we interact within our team is critical. The skill set is, there is a threshold where if you don't have that skill set, you can't work with us. So that skill set, that's a yes or no. If you don't have it, you're not on the list. So what we really look at is we have to test that skill set and confirm it, but the culture is so critical to our success as a business. And so with other companies out there, culture is critical, but and you can make up for some of the skill. But what we see a lot of times, though, with outside in the marketplace, is just lack of overall skill, and individuals trying to learn on the fly or thinking QuickBooks can save all, and they realize that ultimately that's not what happens.
That's an interesting point you raised there. Is there this bit of a prevailing perception that if you've got the tools, you'll have the data that you require, and thereby the insights that you need? Or is it a different issue altogether?
Yeah, we always say garbage in, garbage out, right? So you can get all the right tools and all the right technology, but if you don't understand, or the individual that's using it doesn't understand the foundational aspect of the information that's going into those tools and into that technology, you're not going to get good data, right? So
Mhm.
that foundational understanding of how the information before it goes into those tools is critical, and how it's entered and how it's used. And so that's what we find a lot of times is companies will invest heavily in the technology. They'll great technology from a reporting perspective, an insight, data and insight perspective. but the outputs of that technology are only as good as the inputs that you put into it. And that's where we see a lot of the challenges is the lack of the sophistication on the inputs that creates the outputs. And so you end up with a lot of times companies, they abandon the great systems that they spend a lot of money on and they go back to their Excel spreadsheets, or they're getting data out of it, which in a lot of cases is not fully accurate or is not really the depth and detail that they for what they signed up for, right? They're not getting
Mhm.
what they thought they were going to get. The system may actually be able to do that, but they don't have the team internally that is sophisticated enough to actually get to that point. And that's what software and technology, and that's what a lot of times they don't tell you is, hey, you know what? Awesome technology, great software, great systems, but you have to be be coordinated. You have to be have the right infrastructure to be able to support the ability to use those technologies the right way.
And I'm curious, what would be your take on whether or not there is perhaps an undervaluing or lack of sophistication in appreciating the knowledge and expertise in various areas of a business?
Yeah, I talk about this a lot actually. A lot of times a business owner will start the business because they know their product or their service that they're starting the business around very well. They're an expert on that product or service, and which is fantastic. As they as that product or service is successful and they begin to have some level of success and they grow, they start to see and they start, what happens is there's all other aspects of the business that start coming at them, right? You have
Mhm,
accounting and finance, you have sales and marketing, you have operations, which a lot of times the business owner is actually good at the operational side because they know their product or service, so they know how it works, they know how that stuff should work. So a lot of times they are can be pretty good at the operational side. Then you have HR. I never knew how important HR was until we hired the right HR director, and it really changed our business and our culture and how we operate and the retention of our employees unbelievably. And so that those aspects are so critical. And so with a lot of times as first time entrepreneurs and business owners, they start to grow and they think, okay, well, I'm just going to hire an accountant and they'll do the accounting and I don't have to worry about that. And then I'll hire a couple sales people and they'll sell the product and I don't have to worry about them. And then I'll hire an outsourced marketing firm or somebody in house for marketing and they'll do that. And I can focus on the operational piece, which I'm good at. And what they find is that all of those pieces, they find that it doesn't work out how they thought it was going to work out. They find out they hired somebody in accounting and now they're not getting timely reports or they're not getting the information they thought they were going to get, or they're having cash flow
mhm,
issues that are challenging they don't understand, or they hire sales people and they're off doing their thing and they're not getting the results that they thought that they were going to get. Same with marketing. And now they're spending a lot of money on all these areas and they're not getting the return on their investment. And so, my biggest level of advice as it relates to your question is make sure you hire the right talent, the right people, and the right expertise. You have to have that top level of expertise, whether it's in house or outsourced or an advisor. But also, you have to be able to manage those people, those individuals, and you have to learn, you have to dig deep and learn and understand those aspects of a business. I didn't know a lot about sales and marketing when I started the company. I'm still not the expert on it, but I know a lot more. I know a lot about it now. I'm not, we have a sales team, we have a marketing department and team, but I am driving them. I am making sure that we're still on the right path. I'm part of the decision making of what's happening. Same with HR, same with accounting. That is my background experience. The operational side, we have individuals that drive our operational success, but I'm heavily involved in how we're doing that. So it's critical that the business owner or the entrepreneur or the CEO or the executive team, they bring the right people in place, but they still have to manage those people. They still have to meet with those people. They have to understand what are the metrics that drive success in each area of my business so I can measure
mhm,
that and make sure that we're meeting the expectations we have. Otherwise, you end up spending a lot of money and you don't get the returns you want.
mhm. Let me see if I understand this correctly. The issue that at least some companies face in hiring talent and making sure that they get their return on investment isn't necessarily that they're hiring the wrong people. It is perhaps more to do with the fact that they aren't setting the right expectations and the outcomes required from these folks in order to achieve particular
Right.
outcomes. A lot of it is perhaps unsaid. If
Yeah.
that is the case, I'm curious, what would be your prescription to that problem, especially as it relates to coming at coming up with solutions that make financial sense?
Yeah. I would say it's oversight and it's process. So
Mhm.
individuals hire a salesperson or hire a couple salespeople and they say, go off and sell our product. There's no process, right? There's no understanding of what are their activities that they have to perform to ensure a successful result. One of the best things that we did for our company, it's probably going on 6 or 7 years ago now, is we actually hired an outside firm that helped, and we spent 6 months with them and really sat down and defined what is our sales process, what are the activities that make us successful, how do we measure success, and document that process all the way from not just when we get a lead and how we sell that product or that service when we get a lead. It's what are the activities that we are performing to get a lead? How do we measure that? How many, a lot of ours is based on referrals. So how do we develop, how many meetings a month are we going to? Who are we meeting with? What's, and digging down even deeper, what is the goal we're trying to accomplish when we do have a meeting with a prospect or with a center of influence or somebody out there in that marketplace? So really breaking that down and then having the metrics that you can track that with each person on an ongoing basis. Hey, okay, great, here's the meetings, here's the people you talk to. Did you meet that requirement? Check. Yes. Okay, now let's dig deeper. What were the conversations you had with these individuals that you talked to? What was the result that you were hoping to get out of that? Okay, check. Okay, now we're meeting expectations. All the way down to how we leverage and use Salesforce or HubSpot or whatever CRM we use. All of that is to be consistent. And so that was the game changer for us and really created scale in how we go out to the market and sell our services, and then how we leverage marketing to do that as well. And so that process is critical. When it comes to accounting, it's the same thing. It's what is the process on how you invoice so that you can anticipate scaling of invoices, the quantity if the based on the increase in quantity, how you pay your bills. What's the process on how you pay your bills? Do you pay sporadically? Do you write checks? Do you do it electronically? Do you have a process where you just pay every Friday? You have a process to pay your bills. What is that process? Closing the books every month. What's the process to close the books? To ultimately then produce good financial statements so that you have the visibility as an owner to look at it and say, okay, here's what's happening with my business. Here's what's happening with the different aspects of my business. I can look at it by product line. I understand my margins, I understand what I need to do now to increase that margin. So really when it comes down to answer your question, it's all about oversight of that, developing the process and making sure you have the right oversight to ensure it's successful.
As a company goes from one level to the other, so say 6, 7 figures to 7, 8 figures, etc. Obviously, there needs to be changes in how the business operates. My question is it really necessary for a CEO to be hands-on and really monitoring the details of each department, at least at an oversight capacity, or should is it feasible for them to lay out the vision, certainly the broad metrics of what needs to be achieved, and allow for the teams to use their deeper expertise in these particular areas to forge ahead and create a path?
Yeah, I would say it depends. And I would
Mhm.
say it depends based on the infrastructure and the team and how you built the team underneath you to be successful, right? So if you don't have other leaders within the organization that you trust and you don't have any processes and you have no metrics on how you measure your business, you're going to have to, as the CEO, you're going to have to be very hands-on on every aspect of your business. And the reality is that that prohibits the ability to scale effectively.
Yeah.
If you've built the a layered management structure on all aspects of your overall all aspects of your business, you have the processes in place as I discussed, you have the metrics that define success in every aspect of your business, then and you have a leader overseeing all aspects, each aspect of your business. As the CEO, you can then set up consistent meetings with those leaders, go through the metrics, understand where you're at, and then move on to the next and
Mm.
focus on the again, it's all about how you pull yourself out. We've all heard this. How do you pull yourself out of the business and work on the
Yeah.
business? But you can't, it's very difficult to do if you don't have that structured leadership foundation and infrastructure in place. It's critical. And for us, we've been at this for 15 and a half years, and it took a long time to get to a point where I felt that we had the right leadership structure in place. And the
Mm.
first couple of times it didn't work. It wasn't what we kept tweaking it, right? We kept tweaking. And now we have a very layered management structure in place where with multi-layer QA QC ensuring the quality of our service to our clients, I will put the quality of our service up against anyone else in the marketplace in what we do and the value that we provide because of how we've structured our operational side of our business, and then on the sales side the same thing, and marketing and HR. And so now it's about meeting with those individuals consistently, talking about what's happening, what's working, what's not. Are we meeting our metrics? Are we meeting the expectations that we have? Why not? What can we do? And really start talking about what can we do to continue to grow and achieve the results that we want.
Mhm. Okay. In your experience working with various businesses, I would imagine that you're finding that there is a need for financial education, at least in some areas within the business. I'm curious, how do you raise the issue, even to make them aware of it? Because I would assume that a lot of people aren't aware of it because they've
Mm,
been doing business as usual and it's been okay so far. How do you make them
yeah.
aware of it, and how do you address these gaps in order for them to level up, so to speak?
Yeah, I think education is by far the most important. I think that's part of why I'm on here with you. Is if I can
Mhm.
educate business owners and entrepreneurs about the importance of finance and accounting earlier on than when it's too late or when a problem occurs, then it's unbelievably how much that impacts the company in a positive way. What from so beyond the education, a lot of times, unfortunately, it takes some sort of a pain point. Something has to occur. There has to be a pain. A lot of times there has to be a pain for the business owner or the management team to say, hey, you know what? Something's not working here. We're feeling this pain. It sounds like you understand finance accounting. Help me understand what's going on here. Why am I having this pain? And I love talking to business owners all day long that don't have any pains, that want to learn, but the reality about finance and accounting, but the reality is everybody is working very hard, working a lot of hours, stretched in a lot of different ways, and business owners a lot of times just don't find the time. And so, or the priority or prioritize it. When the pain gets strong enough, the priority then keeps going up and up, and all of a sudden it's a top priority because they're saying, "Oh man, I don't know if we're going to have enough cash for payroll," or "I need bank financing and I can't get my financials done," or I have to get audited financials to give to the bank because I do have financing and I can't get through my audit, and now my loan is at risk. Or I'm trying to get I'm trying to bring in investors and they've asked me to provide the financials, and I hit print on QuickBooks, I gave it to them and they gave it back to me and said come back when you're more organized. So those are significant pains that cost owners significant cash flow opportunities and ability to grow, and can put them back years because now they have to sort through this, they have to get through this, and so on. Those are significant pains. And I didn't even mention just having visibility and confidence in what you're looking at so you can actually
Mm.
even improve your margins, understand what your expense structure is. Are you paying for things that you don't necessarily need to be paying for? Are you the investments you're making in your business, are they maximizing value to your business, or are you just incurring costs and constantly running around break even and just in that hamster wheel? And so the education, anybody that is willing to get educated up front And that's why I love a podcast like yours, Vinay, because you're speaking to those proactive business owners who want to hear about and learn about how to grow their business and how to have success. If I can educate them in any way, that's just what I love to do.
Certainly. Do you find that there is often value in providing financial education, not just to perhaps the C suite in the business, but even to people involved in marketing, sales, and customer service as well?
hmm Yeah, absolutely. I think it's critical because if you have the right team and the right culture, everybody is excited about working for a growing business. And you can depend. A lot of companies can put incentives for the team at all levels around business growth. And so you talked about a customer service rep. If that customer service rep understands the different aspects or offerings of the business, understands how that impacts the growth and overall success of the business, when they're talking to a client, there's opportunity
Mhm.
to ask the right questions to potentially upsell or provide another offering or provide another provide some additional insight to the customer and value to the customer, or even at a minimum just ensure that you're meeting the expectations of the customer above and beyond and making happy clients and improving that retention rate of your clients. That's all critical. And so I know from our example is we have part of our overall bonus plan is tied directly to the success of the business. And depending on who you are, is it's tied to different aspects. And so we want our team always continuously looking at that. So that's
Mm.
critical. On the sales side, what we found is a couple of things. One, from an accounting perspective and from a business valuation perspective. So, if you want to take your business, you want to exit, you want to sell your business, consistency amongst consistency in your contracts is very important. If you have a sales team that has too much, is given too much leniency to change the terms of your contract, it can be very challenging from an accounting perspective, the stuff that nobody really cares about until it comes up and it becomes a big issue when you're trying to get
Mhm.
audited financials and you're dealing with how do you recognize revenue and all that fun stuff. That can be a very expensive ordeal if you have a lot of changes in the contracts. But what a buyer also wants to see is consistency in the contracts. So it gives them more comfort and you can ultimately you do these little things over time to increase your multiple level. And what I mean by multiple is if you want to sell your business, a lot of times companies or a buyer will look at a multiple of your net income, or EBITDA is basically what they say. And so if your EBITDA, which is basically your net income, carving out things like interest and depreciation, is a million, let's say it's $1 million, that range of buyers out there might be willing to pay 4 times your EBITDA number, 8 times, 10 times. You want to be on the 10 times side, right? You don't want to be on the 4 times. The people in the 4 times have high client concentration. They have limited infrastructure. They don't have financial information that the buyer can trust. They don't have processes around like what we talked about around
Mm.
sales, accounting, etc. They don't have consistency in their contracts amongst their sales team. And all those things impact the value of your business. And so that's what we talk about a lot is how can we maximize your business value and what are the things that you should be doing to do that
Mhm.
beyond just the accounting side.
Certainly. Certainly. To help us wrap our minds around this and provide a degree of clarity, could you share an example of a company you perhaps worked with and provided a degree of education to help with the process?
Yeah, absolutely. So I'll share a recent success story that we had. We started with a company, working with a company probably 3 years ago, and they were in the drug and rehabilitation space. And these were two individuals that started this company, and they had a center and a home. If they acquired real estate, they had different homes that they acquired and retro made sure that they're up to compliance for the center that they were creating. And we came in and they didn't have really any leadership around their accounting and financial environment. So their goal was, and they were growing very quickly. They're very successful. They had several. The individuals had significant experience in that industry, and especially with dealing and negotiating with insurance carriers to ensure that they had the right terms and the right levels of profitability. So immediately we were able to talk through and prove out the levels of profitability and how they were negotiating and the impact that would have on their financial information. We were able to get their financial information in an order that was presentable and added credibility to get financing very quickly for the real estate they were acquiring and also for a line of credit that they were getting. And they were able to do this with very limited historical financial information because they were such a new company. We brought in the banking relationships that we had because we were working with this client. The bank immediately had more confidence in what they were getting. They already had a leg up on that. They knew that they were getting solid financial information that they could trust. We were able to put together a financial reporting package and define metrics based on their industry of what defines success, understand the margins of the different types of services that they're providing and the margins that they're getting in those services. So that impacted how they perform those services and how they can in turn ensure the highest level of margin. And then ultimately we took them through the sales process. So we helped them with communications with potential buyers. They were acquired by a strategic buyer, a big name in the marketplace, and we help them through that process. And the due diligence process can be significant. And what companies find out pretty quickly is if you don't have good financial information that you're providing to a potential buyer, one, they're going to you might get an LOI for one amount, but they're going to discount it because they can't trust the financials. So it's critical in that process to not allow the buyer to discount from the LOI. It's a game that they all play. They think, oh yeah, I'll give them an LOI for this, and we'll end up being able to buy the company for 20% less because we'll find all these reasons why it's not really worth the value that we gave them. We don't want to give them any reasons from a financial side. We want the numbers to be buttoned up. We want them to see everything they were expecting to see. We want to give them credibility in the information that they're seeing. And if you don't have that sophistication when you go into it, there's a lot that can be left on the table. And so that company being acquired about 6 months ago, and then we continued on after that acquisition to support the transition of the finance function of that company into the company that acquired them. So into the acquirer, the buyer. And so we were on for another 6 months or so, and that engagement wrapped up for us in December of 2023, and it was a huge success for all parties. And even though we're not working with them anymore, it was a great success, and we have great references from everyone that we worked with over there. So that was just a recent one that came up off the top of my head, is just all the different things and our involvement in getting good financial information to management so they can make decisions, giving them confidence that they're getting that information, and then working with them to get that financing in place through banking relationships, help them through creating additional profitability into their business, and ultimately then selling. That's just a fantastic story that we have. And we have a number of others like that as well.
Obviously, if I'm hearing this correctly, customer experience or the experience that you're creating for your clients is key. I'm curious, how do you approach this idea of creating an experience that not just fuels their ability to take things to the next level, but is perhaps enjoyable?
Yeah, it's interesting. So when we talked earlier about when you hire, do you hire for skill or
Mhm.
technical abilities, or do you hire for culture? And I said culture is number one, right? So if we can hire somebody in accounting and finance, and if their personality is challenging to work with, that's going to be a challenge. Our clients aren't going to want to work with us very much. So that's a critical aspect. Our hiring process is critical, and what we put in the process of hiring our team is a lengthy process that we've perfected over time. So that's one. So one, you have to hire the good people, but you can't just throw out good people even though they're talented, and expect them to be successful, because then you lose control over the success and the quality of each client individually. So we have to have that process behind the scenes to ensure that. So we have good people followed by good process on how the process that
Mhm.
they follow to ensure that we're successful. And it starts from anything from at the beginning to making sure that we have weekly success calls and meetings, even if it's 15 minutes with the client. Keep them updated on what's happening. Here's what we talked about. Here's our plan. Here's what we're working towards. And here's the update on that. Here's where things have changed. Here's where things have adjusted. Enforcing those meetings, making sure that we have the leaders behind the scenes, the operational leaders. They are involved. They're meeting with the client, making sure that they are introduced. They're a resource to go to for our clients, and making sure that they feel that they're being supported. And a lot of times, those are not even that work behind the scenes is not even being included on the bills to our clients. We invest in our business and in our people to do that. And so making sure we have that process where we say, hey, here's the great people, here's the great process, and here's the results. And the other thing, that the most important thing is, we don't want to just jump in and just start doing accounting or doing CFO stuff, right? Nobody knows what that is. So let's make sure we have the right plan. We prioritize, we've assessed your environment and your team and your processes and everything, your technology, your reporting infrastructure. Let's understand your priorities, and let's make sure we have a project plan that we're working off of, and we're always looking forward, so that we're always talking about, okay, what's next? Here's what's next. Here's what we're working towards, so that the client can always see that we're looking forward versus looking into the past. And that's so critical for these business owners.
Certainly. On the flip side, what about employee experience? Obviously, you said that hiring and culture is key. You also mentioned that hiring the right HR director certainly made a difference in terms of retention, but could you speak to the overall employee experience that you're creating?
Yeah, so I think it's two things. It's so we talked about the culture, and culture is not just fun events, right? If we go to two or three fun events, or we do a happy hour, or we go to a baseball game, or we have a foosball or ping pong table or in our office, that's part of culture, but that's a very small part of culture, is what I found. It's interesting. We used to have physical office. We had four physical office locations where we had our people before COVID. During COVID and after COVID, the the overall atmosphere of the working individual changed, as we all know. Everything became
Mhm.
more remote. We shifted more to a fully remote model. We do support clients. We do meet with clients in person sometimes, but now we service clients all over the country in a fully remote basis. And so we shifted our culture to be able to do that. We saved obviously quite a bit of funds from our office space that we're not having to pay for anymore, but we reinvested a lot of that back into our team and the culture and what we
Hmm.
do. From an HR perspective, we created, and this is critical, we created a people manager infrastructure. So we're service based. So the individuals will work on a team to service our clients, but they also have an individual people manager behind the scenes. That's not necessarily somebody they're working with on their client. That is somebody that is there basically their manager, and sits down with them, goes over their reviews, their quarterly reviews with them, talks to them about their compensation, provides them the offer letter when they start, and is there to support their growth within the organization and their career as a whole. And so what I say, we want to build a platform where individuals want to work with us because they can see that, one, they enjoy the work, but it's also a platform where they can continue to grow, learn new things, grow their career, take on new challenges. And if somebody was with us for 5 or 6 or 7 years, and they feel that they've learned and grown and they've gotten to a point where now they have an opportunity to move on, then that's a success for us. And so give them the career growth opportunity. And we're always able to do that within our organization based on how we're structured, is that you're not
Hmm.
waiting for that person in front of you to leave for you to be promoted. If you are deserved to be promoted, you're promoted, and there's a role for you. And so giving them that opportunity to do that and try different things is critical. So you have, and then reinvesting. The events are important. We have a coffee, we have a happy hour, that we have just a coffee for people in this area, and then we have something else going on for people in this other geographical area. And we try to get people together in those groups as well. And then we have virtual events where we have once a month, we have a monthly meeting every month where it's an update on the company. And then we have every 2 weeks, we have a Tuesday morning training that's done. That could be training on our process, it could be technical training, it could be training on just how to be a good consultant and the soft skills. So all of those are important aspects as well of what creates a good culture.
Brilliant. And given the last couple of years, what would you say has been key to driving growth at Signature Analytics?
Yeah, I think number one, obviously, you have to be able to bank on the quality of service. So we have to, our reputation is critical. We have to have that reputation in the marketplace. There's more and more players out there in what we do than there used to be. I think they're all finding challenges in how they service their clients and in creating the scale to get beyond 5 or 10 people, but there are more players in the marketplace. So the quality of the work is critical, number one. If you can't hold on to your clients, it's going to be very difficult to grow. And then adapting to the environment from a sales and marketing perspective. And so we built a lot of our business on what we call partner relationships, centers of influence, et cetera. We have a model to do that and to do that very effectively. But now what are we doing now? We're specializing in certain verticals. We have a very strong, actually about 20%, about 15 to 20% of our clients are in the nonprofit space. So we now have a nonprofit vertical where we have a leader, we can dig deeper in that industry, and the depth we can get with our clients in that industry is beyond what they can get from somebody else. We have other verticals that we've created or that we are creating in the private equity space, in the construction space, manufacturing, distribution, professional service. So really all over. So we're really starting to define those verticals so we can go deeper with our clients. We can also then market directly to those verticals versus taking that shotgun approach. We can take that a little bit more narrow and really market that depth into those verticals. So that's critical for us. And then also creating more channel partner relationships nationally is what we're doing as well. So you continuing to evolve. I think what we found is really focusing on certain aspects of your business that you can really promote into the marketplace has also been very successful.
If I got my facts right, you created Signature Analytics in 2008. Is that correct?
That's right. Yep.
So that was during the recession at
Yeah.
that point in time. Are you seeing, I guess, some similarities or a few similarities to what we're experiencing today,
Mhm.
given when you started the business?
Yeah, it's interesting. I would say that I didn't have a lot to lose at that time. I didn't have any
Mhm.
employees. I didn't have any revenue. There wasn't really, I didn't know what I was really getting into. So from what I had to lose, I didn't really have a lot to lose other than lack of bringing in clients and revenue in the first place. So that part made it easier than if the 2008 situation would have happened right now. But we've also gone through COVID, and that situation has been crazy. What I'm seeing in the marketplace right now is interesting. I'm The metrics that you hear from a macro level, and when you hear the big firms, the Goldmans, the government, and I have a good friend who works for Citibank, and he works with very ultra high net worth individuals, and he's a wealth manager. And he says, "Hey, the metrics look great right now. The metrics are great. Everyone's doing great." I don't know. Our clients are. That's not what I'm seeing from our clients. Still a struggle out there that's greater than it was before, let's call it, when things were quote unquote normal before COVID. And we're seeing that in how clients react to us, in how they make decisions to us, and also prospects, and also in just their overall cash flows and the challenges that they're going through as a business. So I think that underlying, even though some of the top level metrics might look good, I think that some of the underlying metrics at the individual level are a challenge right now. And and from a and so that what we're focusing on with a lot of our clients is how do you weatherproof your business? How do you ensure success in uncertainty. And that's been going on for 18 months now, right? We started that,
Mm.
how do you weatherproof your business, over a year ago, right? And we're still in it because we're in this area of uncertainty, it seems. And so we're seeing a lot of that, but really focusing on how do you prepare for the future, and how do you do that by understanding your financials, and how do you focus on the expenses in your business that drive value to your business, and other expenses that you may have invested in 6 months ago, 12 months ago, that you're still incurring. Are they providing value to your business, or or are they not, and should you consider letting them go? And sometimes that, unfortunately, that has to do with people as well. Is every person in my business providing value and to my business or not? And has my business shifted where this person, it maybe isn't the best role in my business anymore? But other things like general G&A expenses, really going through those in more detail. Technology costs, real estate costs, same thing that we did. Hey, we cut our real estate costs because we went more to a virtual model. Is there opportunity to downsize even if you're not going to go to a full virtual model? Financing and that relationship with the banks right now is critical. Getting those relationships now in anticipation of what might happen in the future. So be able to look into the future with our clients is critical, so that we can help them prepare as to what may or may not happen in different scenarios that may happen.
Brilliant. Is there perhaps an aspect or two around finances and accounting that you find most doesn't get talked about very much? If so,
Mm-hmm.
what would they be?
Yeah, I guess so this aspect does get talked about, but there's a lot of underlying factors that don't get talked about. So what the number one thing for small and mid-sized business is cash flow,
Mhm.
right? Understanding what that cash flow is critical, and understanding what that looks like a few months down is critical. So managing that is critical. So that's number one. But number two is what the importance of understanding how that ties into business success through the numbers. And so when we talk about
Mhm.
and talk about this until I'm red in the face, but in order for a company to achieve the goals that they have moving forward, they have to have confidence in their numbers, has to be timely. We call it art, accurate, relevant, and timely. If you
Mhm.
have that and you have a process to produce that every single month, when you need financing or when you need to talk to a bank, you have the package ready to go. It's not a problem. When you have when you need to get reviewed or audited financials, it's easy. 90% of it is done every single month. And so the importance and that's just the compliance side, being able to dig into your numbers and have clarity as far as what your margins are critical. And I think that's another piece I want to hit on is, if you're a $10 million business and your margin is 40%, let's say, that means that $4 million is your gross margin. Below that is all of your other expenses. You have sales and marketing, and you have rent and utilities, and you have other administrative costs, and then you get down to your net income at the bottom line. So let's say your administrative costs are 3 million. So now you have a $1 million bottom line on 10. You're at 10% bottom line. If I can make my if I can improve my gross margin percentage by even 1% or 2%, that's massive. One on $10 million is $100,000. So that goes down to the bottom line. That's an increase of 10% of my bottom line, because all those other G&A costs are staying the same. So if I can get to 41%, now I'm at 1.1 million on the bottom line. I just increased it by 10%. If I can get to 42%, I can increase it by 20%. That's significant. That goes right into the pocket of the business owner, or is able to be reinvested. And that's what we want to do. We want to break it down. So when I ask what your margins are, and I hear business owners say, it's between 45 and 50%. Well, is it 45%? Is it 50%? Is it 47%? because 5% is massive. That's a 50% difference on your bottom line in this example. That is a lot of money. And if we can nail it down or we can work with you to improve that, that's critical. And that is what is not talked about or clearly understood a lot of times in a business.
And if you were listening to this episode, what would you say would be your top takeaway?
If I was listening to myself talk, I think that one of the takeaway is just, again, as you're building and growing, make sure you have the expertise in all
Mm.
areas of your business, and always be thinking about, how do I maximize the valuation of my company, and how do I build it out to scale. And it's challenging because business owners don't want to invest to do that, but there's ways to do that to limit investment, but still ensure that you're set up for success. And that would be, I think, the key takeaway.
And if listeners are curious, want to find out more or connect with you, where would you recommend they head to?
Yeah, the website is easy, signatureanalytics.com. They can reach out directly to me. I love talking to business owners. Call me direct. My office line is 858-228-5643. Or shoot me an email at the letter J, Kruger. That's J, and it's Kruger at signatureanalytics.com.
Excellent. We'll include links to the website. And are you active on LinkedIn at all?
Yeah, LinkedIn. Yeah, you can always reach out on LinkedIn. I'm very active on LinkedIn as well, as is our company. So
Yeah.
shouldn't be too tough to find.
Terrific. We'll include links to that in the show notes. Jason, thank you for doing this. It's been a pleasure.
Thanks so much, Vinay. I really appreciate it.